recording. And I'm gonna open the room. Ready, Dina.
Hello, everybody, and welcome back, or welcome if you're joining for the first time. We had part one of this series 2 days ago. So I'm looking at the names of the people who are joining, and I see several people joining from that first webinar. So thank you for joining again. I'm Dina Khalil, Senior Manager of Urban Research and Advocacy for the Middle East and North Africa at Habitat for Humanity. And it's great to see so many of you joining us for this second session of our webinar series on social and affordable rental housing. So just as a brief reminder, the series is organized by the Urban Housing Practitioners Hub across Latin America and the Caribbean and the Middle East and North Africa in collaboration with Habitat for Humanity. And through this partnership, we're really aiming to connect practitioners, policymakers, researchers from different regions and parts of the world to share experiences, lessons, tools, and innovations that can help make housing systems work better, be more inclusive, and be more resilient. In our first session, which took place 2 days ago, we focused on kind of the big picture. So we wanted to give a background on the policy context for low income or affordable rental housing, the structural constraints on why it isn't as accessible or as widely available as we would maybe expect it to be. What are some persistent gaps that continue to limit the development and supply of affordable and adequate and well-managed rental housing? So we heard from the panelists about the limited supply of affordable rental units, in contrast with the vacancy rates and many very high vacancy rates in many parts of the world. We talked about the lack of enabling finance mechanisms that can help people to access rental housing and the regulatory barriers that often discourage small-scale landlords or make formal rental models hard to sustain. We also talked about, or the panelists touched upon the social perception of renting, which in many countries continues to undermine investment in rental housing and policy attention to it, particularly in light of the role that ownership plays as a mechanism for social insurance, for pension planning even, and for building equity and intergenerational wealth, particularly in contexts with limited social protection mechanisms and limited wealth building opportunities for low-income groups, such as many of the contexts that we come from. So today we're taking the conversation a step further. We're moving from identifying challenges and focusing on gaps to discussing approaches and tools that have been used in different contexts. Have these approaches and tools succeeded in increasing the supply of and access to affordable rental? What challenges did they run into? What had to change? So this session is all about models, what is working, what did not work, what can be adapted, and how different actors are driving change in this space. So we'll be hearing about examples of programs, tools, partnerships, and financing models that aim to expand access to affordable rental options for low-income and marginalized groups. So these cases will hopefully show the diversity of approaches that can make a tangible difference in access to affordable rental. So on that note, I'm delighted to introduce our moderator for today's session, Simon Wali, lead financial sector specialist at the World Bank. And Simon has extensive experience in housing finance and market development, and he'll be guiding us through today's discussion and engaging with our speakers and the lessons emerging from their work. And joining Simon on this roundtable discussion, we also have Dr. Hela El Hilali, who is Deputy CEO of Egypt's Social Housing and Mortgage Finance Fund in Egypt. She'll be talking about experiences from Egypt's efforts to expand affordable rental options through national housing programs. We also have Marina Munoz, who is the regional manager of the Urban Housing Practitioners Hub in Latin America and the Caribbean, will bring perspectives and examples from across the LAC region. And we also have Kevin Onjinku from Kenya State Department for Housing and Urban Development, who will be talking us through some of Kenya's experiences in advancing rental housing within the broader affordable housing framework. So we're very grateful to all our speakers for joining us and for the rich perspectives that they will bring to the discussion. And with that, I'll hand over to Simon to take us through the session and to introduce the topic in more detail. And I want to thank you again all for being here, and I hope you enjoy the conversation. And over to you, Simon.
Thank you so much, Dina. Thank you very much for organizing this session. I'm very excited. I think rental is often overlooked. It's kind of the forgotten child almost of housing policy. Yeah, it has an awful lot to offer, particularly in terms of affordability, a rapid solution, and it balances out housing systems, I feel. So it's great to have this focus on the topic. And it's the panelists you've got are perfect. I work in both Egypt and Kenya, and I think there's a lot going on in both countries. So I'm excited about this panel. So hopefully you can see my screen. I'm sharing. I've just got a couple of slides, and I'll provide a bit of context to why we is important. And then I've got a couple, maybe three ideas that are kind of recurring themes in our work at the moment. So we respond to what governments ask us to help with and support. And these are areas that we're seeing an increase in demand for recently, particularly in this kind of rental space. So on the slides, the first one I've got, and often the difficulty with rental, particularly in emerging economies, is there's not an awful lot of data. So the rental sector is often a grey sector. So it's difficult to know exactly the size of it or the volumes or the financial flows around it. So I was pleased to see that OECD is doing a lot of work at the moment, generally in the affordable housing space, both social housing, but it's got this great chart looking at housing tenure. Unfortunately, it only covers OECD countries, so it misses out a lot of the emerging economies that we work in. Nevertheless, I think that it's really fascinating just to see the variety of tenure mixes across countries. On the one side, you have many of the former Soviet countries where you had the mass privatizations in the early 90s. And so countries like Romania or even Ukraine, where I'm working at the moment, I think they've both got 90% plus home ownership rates. The story that isn't told in those numbers, though, is that there's actually pretty large rental sectors in Romania and Ukraine, but again, in this kind of informal grey area, which means it's very difficult to regulate, it's very difficult to tax, and it's kind of outside of the ambit of government policy in that sense. And then at the other extreme, you have countries which would seem to have very low ownership rates, particularly Austria, Germany, Switzerland. And again, there's a backstory. The truth is, people own property in Germany and Switzerland, but they rent themselves, and the property they own, they rent out, and that's more to do with the tax frameworks. So rental generally is complex. It's very dependent on overall government policy, but as a rule, it's a great way to improve affordability and access. And so the next slide really makes the case for why rental is important. As I said, firstly, it's affordability. You have lower payments. You don't have the big down payment requirements. You don't have to go through the same sort of credit checks that you might be required to for a mortgage loan. It's a more flexible solution, particularly if you're moving to a job, but you're not sure how long the job's going to be. If you're a student, you don't necessarily want to buy a property in those circumstances. So the rental provides that flexibility, that mobility for labour. And I think that this enhances kind of economic growth in countries where you have greater labour mobility. The third one is life cycle adaptability. Not everyone is ready to make the step to own property, particularly if you're have a growing family. You don't want to move again in a couple of years when you have a couple more children and you need more bedrooms. So rental provides the kind of a transition stage housing. And then I come to the last one. A lot of my work is in Africa. That is kind of the continent that is seeing the most rapid urbanization at the moment. And that urbanization is a lot of people migrating from rural areas into cities, largely for the jobs. And what they're looking for is really kind of cheap housing, not necessarily ownership. And if that housing isn't there, this is where you end up seeing the proliferation of slums. So having good rental solutions provides that housing option, but in an organized way, allows for investment into that rental stock, and kind of limits this kind of urban sprawl and particularly the growth of slums. So the number at the bottom just shows the importance of it, and this is a very outdated number. As I said, it's a struggle sometimes to get data in this area. I've estimated that it's probably almost double that amount now, so well over 2 billion people around the world currently live in rental housing. And as I said, it's often not kind of not seen as the kind of primary policy choice, despite the importance and the number of people and households living in rental housing. So I've got 3 areas, as I said, that I'm not kind of ranking them or prioritizing them in any way, but these are kind of 3 things that are coming up in many countries. The first one being rent to own. We're working on this in, I'm trying to say, in Kenya, in Ukraine. We've discussed it in Egypt, in Maldives, in Senegal, Ivory Coast. All of these countries are interested and looking at frameworks on how to develop rent to own. And one of the attractive things about rent to own is it offers a path to home ownership, but it kind of circumvents some of the difficulties around particularly titling and getting a mortgage, which can be a very, very lengthy, difficult process to get the mortgage lien registered. And this is a quicker way around it. The second big advantage of rent to own versus a full ownership is that you don't necessarily need the kind of 20-30% down payment. So in that sense, it can be much more affordable. From a developer perspective, it can facilitate offloading of properties, particularly if you make it more affordable, more accessible. It's a way for them to have a quick turnaround in selling the stock of properties that they've built, rather than kind of sitting on unsold properties for months waiting for the mortgages to be processed. So there's lots of benefits, but there's also it is very difficult, and this is kind of why we're working hard on it. You really need particularly to get it to scale and to institutionalize it. You need kind of the eco system around rental to work. So you need particularly a strong property manager. There's difficulties in how you price rent to own, particularly in environments where you have inflation and rising property prices. Who benefits from the rising property prices? The owner of the property or the renter, or do you split it? And then how do you calculate that? And then the last point is that the need for a strong regulatory framework around this, or you can end up in a situation where potentially until you've made the last payment, you don't have the right on the property, and you could end up in situations where the owner keeps the property and doesn't hand it over if there's been any default. So having a fair balanced system protecting the owners of the property versus the kind of the rent to owners as it were. So I think in practice it's an innovation. There's a lot of potential to it, but as far as we can see, it's still not really taken off anywhere. So the second one, where again we're working in many countries, from Malaysia, where we did some work recently, Rwanda, Serbia, we were recently involved in, is on real estate investment trusts. And real estate investment trusts is a vehicle that allows pooling of capital by many investors to go into real estate, but you have the liquidity of being able to sell the shares in the REITs on an exchange, versus if you invest directly into real estate, you end up with a very illiquid instrument. So in theory, you're kind of facilitating capital market investment into property. The way it's structured is it particularly benefits investment into rental property that generates a steady, regular income flow. And on that basis, often that income flow is then done in a tax-free basis. This is one of the key features of REITs. If set up right, it becomes the ideal investment instrument for pension funds and insurance companies looking for steady, reliable income streams. Much as with kind of the broader rental sector, REITs kind of tend to work better when you have a kind of a much more institutionalized rental sector. So again, you need that strong ecosystem around rental. So property managers, listing services, and so on, to ensure regular collections, efficiency of the system. So you have minimum vacancy rates, and strong credit checking mechanisms. So yeah, so again, this is a potential of really scaling up rental, making it more professional, and kind of getting this inflow of capital market investment. Again, is one of these ideas that in theory is great, to the extent that you look at REITs globally. It's really US, UK, and Australia, but between them they represent 80% plus of the REITs market. It's still quite niche in emerging economies, albeit that there's a lot of potential, I'd say. And then the last area, which hopefully we're going to hear from Dr. Heller about, is subsidies for rental. As I said at the start, that one of the difficulties with rental is it doesn't quite have the same political weight as ownership. So if you look at manifestos for governments or politicians coming up to elections, they love to sell the home ownership dream. Selling rental as a kind of manifesto promise just doesn't carry the same weight. So it's often overlooked. So subsidies tend to follow that, and subsidies more often than not tend to be for home ownership. So I think what we kind of support is making subsidies more tenure neutral, and having a balanced housing system, which actually, if you have a strong rental system, it actually strengthens the ownership side as well. It removes some of the threat of speculative bubbles in the ownership side and can create stability in the overall housing system, which is to everyone's benefit. The second reason why rental subsidies can play a very useful role is particularly as a short-term relief measure. So we work a lot in crisis situations, whether it's in post-conflict countries, like I'm working in Armenia and Ukraine at the moment, where we have large populations of displaced people, and having a short-term solution that serves those immediate housing needs through subsidies can be a way to house people as you work on longer-term solutions. Then the last point on the subsidies is often the approach on subsidizing them has just been to put a cap on the price of rental. And this is kind of really, in many countries, holding back the development of the rental sector. It limits investment into the sector. If you're a landlord, why would you put more money into rental property and increase your stock if you know the return is going to be capped and limited? And even those properties that you do have where you're barely breaking even because of the rental cap, why would you invest in maintaining the property if you're not making an economic return on it? So one of the other areas we've kind of seen is that there's been in a number of countries, and again, Egypt is a good example, where there's a law passed over the summer removing a lot of the old rental laws, and hopefully opening it up to a more modern approach, and in particular leading to hopefully to investment into rental housing. So as with any subsidy systems, there's a lot of risks. It's difficult to balance it. They're difficult to target. But I think taking some of those risks for a balanced housing system is definitely worth it. So again, there's many other areas, many other innovations, which I'm hoping the panelists are going to talk about. I've not touched on tech. I think there's a lot going on with prop tech and how that can be used to boost the rental sector. But probably enough for me. Let me stop sharing my slides and turn to our panelists. So maybe I can start with a general question of, would you be able to share a successful model from either your country or one you're familiar with in your region that illustrates what rental can do for low-income households at the moment? Maybe Dr. Heller, can we start with you, then go to Kevin, then to Marina? Heller, are you with us?
Yes.
Great, lovely to see you. We can't hear you very well, or I can't anyway.
Could you hear me?
Very, it's a bit faint. I don't know if it's just me, Dino.
No, it's a bit faint and far away.
Okay, is it good like that?
Yeah, much better. Yeah.
Okay. Okay.
Over
I'll
to
keep
you,
the
Heller.
mic near. Yeah, I'll keep the mic near to my mouth. Good afternoon, everyone. Good morning, Simon, and nice seeing you all again. Actually, the Egyptian model for rent is not a new model. We did have before the caps rent, and we have a previous experience in 2016 for rental program, and to get to the truth, it wasn't that successful. It was a bit of loss for the fund, we had very low rent amounts, monthly rents. We had like 300 Egyptian pounds and 410 Egyptian pounds, one for the 75 meters and one for the 90 meters. This was very low rent for renters, but at the same time, it was subsidized from us by almost 75%. These units were eligible for low-income households, of course, and we had launched the program in cooperation with the Housing and Development Public Bank in Egypt. But we had delegated the collection to the bank, where this was the main problem in this program that we had, that it didn't match the Egyptian style of payments, because the Egyptians won't go to the bank to pay the rent. At the beginning, they started like for some paid the rent for 1 year, some others paid for 2 years, some for the 5 years. And after that, started to ask for changing from rental units to own the units after that. But actually, this was like, we had like 5,700 units for rent. We did not get more than half of them as a requests. So we disbursed like 5,700 and we only got requests for 2,500. As Egyptians don't like the concept of rent, most Egyptians go for ownership. They have the knowledge enough that paying a rent is not worth it. You lose your money. You cannot get enough rewards for a rental unit, so it's better to get an ownership. That's why we have like 90% of our products are ownership. But after this pilot project was almost ended last year, we had to go all through the process and see the positive and negative actions that was done. The most negative action that was in this program was the collection. And before we end this project, we have like thought thoroughly how to solve this problem. So our second round of a rental program started by end of last year in November with a fintech company for collection. This company is called Khazna. This program was introduced as a second generation of digital rental program for us in Egypt, in partnership, of course, with Khazna, which is a private fintech in Egypt. The pilot targets around 1,000 units, and we get applicants managed from in the fintech itself. So Khazna controls like almost more than 8,000 companies' payrolls in Egypt. So they will collect for us the money, the rent, monthly rent, directly from the payroll. So they will deduct directly the rent from the payroll before the applicant or the renter takes his monthly payments. So this is how we were thinking how to solve this problem of collection. They take a percentage of amount of money, of course, for administration, and they do it and manage it all digitally. So nobody goes to pay in a bank, or nobody knocks at the door to collect the rent, but it's done digitally through their system. We have launched in last November our first project in 4 cities, and these units have being kept by the cabinets for rent, not more than 1,500 Egyptian pounds. That's like $30 per month. So, and we cannot also deduce or deduct from the renter more than 25% of his monthly income. So if his income is 4,000 pounds, I could only deduct 1,000 pounds from his monthly income, and the rest is subsidized by the fund, which is almost 500 pounds. And this to support the very low income levels. That's below the minimum wage rate in Egypt. So nobody could submit for this program if he's above the wage rates. If he wants to submit his papers above wage rates, he could do that, but he won't be subsidized. He could get the rent at the market rate. Could take units from ours, but at market rate. But the subsidy goes for those who are lower than the minimum wage rates. The whole process is administered automatically from the payroll. The whole process of deduction is administered automatically from the payrolls, and also Khazna pays for us automatically on our central bank accounts. So it's done with no interference. It's been regular payments now for like 3 months or 4 months, because we had our second wave in March. We launched another tranche of units in Greater Cairo. The first were in outside Cairo, that's in Sharqiya, in Giza, but the second wave were in Greater Cairo, that's in Badr, 15th of May. And we had applicants for it also. We took like 4 months to get the circle to work between us and Khazna and the applicants. And finally, in early July, we had our first renters to sit in their houses and start payments for us. A partnership between us as a government and fintech was an innovative for us. It's first time to do this and first time to use a fintech which can be scalable more in the coming period. When we apply, we have been nominated to follow up and start the process of the old rental units decree that was issued by the president in last August, where we have people started also last week on the digital program to apply for substitutional units for the old rental units. So for us, this is really was our experience with Khazna was successful. We had already managed all logistics with Khazna, and we have managed the steps that should be taken by us and Khazna administratively to fulfill the process and get our renters pay automatically with no effortless and safely enough, and for us, for Khazna, and for the renter. So we hope we could fulfill the next steps also for the substitutional rents that's being launched this week, and we hope we could be successful also in this. And please, up to you, Simon, if anybody wants to have questions. Thank you.
Thank you, Hella. I think we'll have some time at the end for questions, but really fascinating example, and seeing how fintech can be the catalyst for change and innovation. So let's stay on the African continent and go south to Kenya. Kevin, over to you.
Yeah, thank you. Can you hear me all?
We can hear you fine, Kevin. Go ahead.
Thank you, Simon. Now, in the context of Kenya, the biggest achievement that the government has done so far is the implementation of the affordable housing program that started way back in 2020, but again came very lively around 2022 to now. What has really happened is that the government has enacted a levy, a fund that at the initial stages was basically um, was basically a voluntary contribution at the initial stages of 2023, but again came back as a law, as a mandatory contribution around 2023. Now, in that case, the government really has accelerated on the implementation of the affordable housing, the social housing, across board the institutional housing, the police housing. So, but again, at different levels or at different cadres of need. So, the government is doing one is escalated market rate housing for the higher income earners. Then the affordable housing that cuts across, and then the social housing that targets the low income earners, pretty much at the low standards of life. Then the biggest achievements that the government is doing currently to try to at least make the housing, fraternity affordable is through the land. The biggest factor in Kenya is land. Land is expensive. So what has happened is that government has zero rated the land. These are public land. As you could know, Kenyan ownership of land is into three tier. That is public, private, and the community land. So the government has prioritized the public land. That is the reserve of the government. Then the construction factor becomes lesser, because if you take out the factor of the land, then the construction, becomes. Yeah, thank you. Then the construction level becomes, lesser. So then, what has really happened is that what has happened is that the construction cost goes down, and with the construction cost going down, we can now see good rates coming out per square meter for units. So right now, the social housing is going as low as 800,000 Kenyan shillings. That is actually 600 Kenyan shillings. That is roughly 4,600 USD for a 25 square meter unit. Then another initiative that the government is approaching this entire housing is that there's the mortgage. The government has partnered with KMRC, that is Kenya Mortgage Refinancing Agency. So what they're doing is that they're taking off the pressure, because we've learned that a majority of our or of the nation are in the urban poor. So the bankability of this cadre of people is very low. So the effect is that there's a lot of interest that the banks and the financing institutions really raise. So the government has tried to broker a deal with a sector of financing institutions, that is a sector of banks and the sector of mortgage providers, to the point that the government is trying to lower the rates to a single digit mortgage financing interests. Right now, it goes up to, for a normal mortgage, it can go up to, 20, 30%. But with with the levy coming in and with the government brokering a deal, the government is targeting a single digit, that is 0 to 9%. So what happens is that when a person applies for a mortgage, the government uses the levy as a guarantor to this particular individual. So then the bank can now trust by giving out the mortgages in the sense that the government has taken that pressure of bankability, of that security, so that the people can now be able to afford the same. Another approach that the government is using is through there are several programs. Example, there's the Building Climate with Urban Poor, that is Big Crop. This is an initiative that was adopted around in 2019 in New York, co-chaired by Brazil and Kenya under the UN Habitat. And what has really happened is that the program aims to improve the standards of the people living in the very urban poor zones. That is the informal settlements, the slums. So this aspect as an initiative of building low cost housing that are resilient. Of course, using the latest technologies that are available, the ABMTs, floating foundations, such that it reaches a point where the entire program aims to reach a point where the balance between now the informal upgrading and the social economic standards of the people within the confinement of the housing in where the settlements are is raised. So this is a donor fund. It's funded through the GCF and several other partners through the Treasury, the Kenyan Treasury Bank, and it spurs. It's going to spur. It's going to spur the affordability of people getting houses at that lower cadre. So on the rent is that the biggest that we're trying to adopt right now, and it's rightfully said, Simon, is that the government is battling with the rent TPS, that is tenant purchase scheme, or rent to own. Right now, through several initiatives, the government has has tried as much as possible to make people understand that these houses are available for them, one, and that they can really purchase them, even though somebody will not have the seed money to put at once. So we encourage people, especially people in the lower economic cadre, to go for the mortgage that the government has brokered, and this can now offset, and it's working. It's practically working. We've seen Mukuru Kwajenga informal settlements, where so far around 3 blocks of around of around 80 units have already been occupied, and the people are living within them currently. But majority, you only give a seed money of 5% of the initial capital, and the 5% of 600,000 Kenyan shillings is basically, if you calculate that, that's 30,000. So basically, if you can provide around $230 as the seed capital. Then now the government takes you through the process of mortgage financing through KMC and several other brokered banks, such that you have a security. The mortgage provider has a security, but again now the repayment terms is now TPS, is you rent, but then eventually you own. Thank you, Simon, for that.
Thank you very much, Kevin. And I mean, Kenya is a great example of a country where the government is really very, very focused on housing. As I mean, if you speak to the government, they'll say that housing is their number one priority. And previously it was part of a big four. Now it's like the big one, which is housing. So lots of initiatives. It's interesting that it still faces this problem of a government politically wanting to push for ownership, where the reality on the ground in Nairobi, 85% of people rent. That's what the reality. So it's balancing the aspiration of having an ownership society and making that happen through initiatives like the levy, but then also serving the immediate needs of people, the vast majority of whom rent at the moment. Okay, so let's move continents now, and let's hear from Marina. Over to you.
Thank you so much, Simon. And well, yes, with the UHPH across the housing laboratories, we've been exploring what's actually working in low-income rental housing across LAC. And a few examples really stand out because they're not just projects, but they have become ecosystems that link finance, policy, and social management. And let me start with Innova Recoleta in Santiago de Chile. It's a local level initiative that created a public real estate model under the idea of fair rent. Here, families pay no more than 25% of their income, and the project combines national subsidies, municipal land, and strong social accompaniment. What's remarkable is that the municipality or the city itself acts as the housing operator, ensuring good maintenance, community life, and transparent management. So here it proves that local governments can be active housing agents and not just regulators. A second experience comes from Colombia, and here Confama, it's a compensation fund that manages social investments for workers and their families. Sorry, here they design a rental to ownership pathway for formal low-income employees who can't afford an initial down payment. So for 2 years, families rent their homes while saving through payroll deductions. Here it's kind of the same as the example that Dr. Hala was mentioning. And the housing subsidies, they small match contributions from employers. So it's a clever hybrid that combines social purpose with financial discipline, allowing families to build credit and stability while living in decent housing. And then we have another example in Brazil, in Recife, where the municipality launched a public-private partnership for social rental housing or low-income rental housing. And here it's one of the first of its kind in the region. The contract spans 25 years and blends local and federal payments with affordable rents calibrated between 15 and 25% of household income. Private developers receive a predictable return in exchange for maintaining affordability and managing the building. And what's powerful about this case is that it links the social impact with the private capital within the same framework, showing that inclusion and investment can coexist. We also have in Argentina an example by Hábitat for Humanity, where they rehabilitated and abandoned a conventillo, it's a term for this kind of buildings, in La Boca, into 9 social rental units. And over the years, 38 families have lived there. It's a small scale, but it's a highly human example of providing transitional housing with counseling, saving support, and training so families can later move on to a more formal rent or ownership. So even in a deregulated market, as Argentina, it's proven viable and deeply transformative. So I would say that across all these experiences, what's working is not a single formula, of course, but I think it's the ecosystem logic. So combining public subsidy with social management, responsible investment, private capital, these models show that when housing is treated not just as a commodity, but as a shared social infrastructure, rental can become a real pathway to inclusion and stability for low-income families.
Thank you, Marina. Lots of examples there. I particularly like the focus on the local nature, working with local government and partnerships. I mean, housing by definition is local, and often having kind of municipalities or state government involved can be better at addressing the local needs and solutions. So a lot of the work we do at the World Bank is about creating the enabling environment. We want to crowd in the private capital, but that only happens when you have the right frameworks in place, the right legal systems. So to each of my panelists, what would you say in your experience are the necessary conditions that can help support a thriving, affordable rental sector? Is it? I mean, we heard about some of the ecosystem, but what is it in terms of the regulatory framework? Is it the law? What is required to make this work? Can I maybe start with Hella, and we'll go in the same order, then Kevin, then Marina.
Actually, in Egypt, we had a very strong political commitment to social housing.
I think you need to speak into the mic again, Hella, sorry.
I'm speaking in it. Here it is. It's in my hands.
Hold it close to you. That's it. We can hear you now.
Okay. So in Egypt, we had really a strong political commitment to social housing. And this was a cornerstone for us and the support from the president himself for our program as a whole. And especially for rent was from the cabinet. So they capped the rent for 1,500, which is Egyptian pounds, which, as I mentioned, $30 per month, which is really considered very low. But they said that this is for the poorest who could have shelter, and this should be subsidized for them, and political support from the cabinet and from the president translated this into like directions under the social housing law in 2014, which empowered us to design and manage our programs for rental and low income people and for the ownership. The second thing was the partnership with the World Bank. So we had lots of pits and faults in our first trial for the program, and as I mentioned before, it wasn't successful, but we have learned from this, and we worked together with the World Bank Group, and it's you, Simon, Maria, of course, Claude, and we had also learned from different countries, like in France, the French rental programs, and we had our own approach. So the partnership had made us more flexible when we want to revise some of the thoughts and ideas of taking the steps we are doing. Third thing was the criteria or the eligibility and the targeting that we need to have. That's the program eligibility, which was almost for those who are the lower from the wage income levels. So this has made us like the boundaries for us. So where we have managed the people who really in need to go for a rent program. We have also from the cabinet or the decree that was issued, the capping for only deducting 25% of the income level for those low wages. And this is also gave us the flexibility of going to the right uh, uh, applicants and choosing carefully those are in need. Finally, and the last thing was the gradual movements, and we had that helped us to transfer from only paperwork to digital work. And we had the applicants to apply through a digital system had reduced the efforts for the applicants to come for our premises to present the papers. We also had made the checks for the income levels directly through G2G availabilities and services. We also had made the banks some of the banks checks on these people, because we took a random number to know if these amounts or these wages that had been issued by HR letters from companies is really accurate or not. So we had to make checks on these people. We went to the banks. We have checked these people's if they have financial other financial incomes that's not stated in their HR letters, like certificates of investments, or they some of them we had find also some of them had like loans, other kind of loans. So if you do have other kind of loan, so your income level is not as stated in your HR letters. Um, Also, we had the digitalization helped us in confirming with the investigation companies to investigate the status of the applicants themselves and to know if they don't have any other amounts of incomes that's hidden. These all 4 points, that's the support, the political support, the partnership with the World Bank, and also the targeting have made it for us like step by step to succeed in going to the right applicants, the needy persons, and to try to interrelate the factors together to give the Egyptian low income housing a much better house to live in. Our case is not yet 100% fully finished. We're still in a pilot project, still working on our pilot projects. We don't have really final outputs, but we still have some. But we did already get some of the like some of the points that's highlighted for us where we should put more efforts and put more work for the coming second pilot project we are heading by next month, inshallah.
Great, thank you,
So
Hella.
you're welcome.
Thank you. So Kevin, same question to you of what in terms of the enabling environment and staying particularly focused on rental. I know you talked a lot about the broader housing policy issues in the mortgage market. But looking specifically at rental, what are the things that the government's doing? And go into, I know you have the TPS, the tenant purchase scheme, which there's a lot of work going, but is there anything being done more on the either social rental, public rental schemes, or private rental? What's happening in Kenya? Over to you, Kevin.
Thank you.
If you can turn your camera on as well, thank you.
Yes. So a lot is really happening in conjunction with the affordable housing program that is ongoing. A lot is happening for the rental, public and private rental sphere. For instance, I know the government is doing something on a policy that is a tenant and landlord protection policy. These are some of the policies that the government has enacted. The government is trying again to zero rate, not especially land, but again provide a bulk infrastructure and trunk infrastructure. Again, these are incentives that that promote the private developers to get into the business. But again, the only problem that that the government has been battling with is the sailing of the rental prices. It's a big issue because as you know, our market is kind of a free market. So with free market, it always takes the turn of what's trendy at that particular zone. So the rental prices tend to go very high, but with the incentives of infrastructure onboarding, then now the developer remains the cost of the land, but then the bulk cost of the infrastructure is taken out. Then that I think that's a very pragmatic approach towards now helping the developers now go down on their costs per square meter, because technically the construction will also go down per square meter. Another approach that maybe the government will try to work around is the planning and the approval approaches of the construction sphere. It's quite costly to get the documentations together to the point that the developers feel comfortable into getting into the construction. If at all, I know there are several initiatives that the county governments are trying to waiver organized developers who come in circles, such that they can access that kind of waiver for the development permits and all that. But if we can have a framework, a national framework that is not fragmented to each county, then I believe that these are some of the approaches that we can now scale nationwide to reduce the cost of construction. Again, that is on land. But again, the biggest that the government again is doing currently on a public level is the development of special economic zones. As the SEZs, these are cohorts of development initiatives that really target the improved livelihood of the people working towards that magnet. So if the magnet is an industry, then the people that are going to work the catchment zone of that particular community, of that particular cadre of people, then we know how our informal settlements crop up in Kenya is that it's due basically because of the socioeconomic, fabric that is not really tight. Where there's an industry, you likely find an informal settlement or a slum. Where there's a very rich neighborhood, you likely find a slum or informal settlements, because one community or one set of people have to work in these zones. But we find that in those zones, there's a very bad fragmented land tenure of the land security. So there are several programs or groups that the Kenya, for instance, there's the KISRIP, Kenya Informal Settlements Upgrading Program. There's the KISIP, Kenya Informal Settlements Upgrading Program. There's the big crop. So all these programs tend to align towards land tenure of a particular, community or a particular slum. So with that, then we see that people can now have that ease of development by themselves. Then that the fear of security goes. That comes with a bankable, because technically the biggest issue we have is the traceability of our developers. How can the banks really trust these developers to the point that they are eligible for very big credit facilities? But again, with good land tenure aspect, we come to appreciate that now the banks can now use those as securities. One, two is the moment now this particular set of developers are bankable, it's an incentive in its own way, because the developments will come up, but again, the sailing of now meets the road. At what rate should the public, should the private developers provide these units to the people? So with the affordable housing, and again, it's competition with the affordable housing, bringing and other units into the market, then slowly the market then stabilizes itself. And with that, I think the public and the private, the market can reach a stable level where we have a good, market selling prices that are really accommodative for all cadres of the social sphere. Thank you.
Thank you, Kevin. So lastly, to you, Marina, and I know you're covering the region, so multiple countries, but out of those countries, do you have a couple of examples of what the prerequisites are in terms of the enabling environment for housing?
Of course.
For rental housing, sorry, yeah.
Yes, of course. I would say, and as you highlighted, local institutional leadership has been a truly amazing tool for enabling the conditions. However, we definitely need national frameworks that can give us stable rules, fiscal incentives, long-term funds that can guarantee predictability for local cities and investors. Regarding financing, a hybrid financing, this blend public subsidized with philanthropic or private resources, and sometimes with non-monetary assets like land or existing buildings, are working. However, we need to design financing ecosystems that recycle value. For example, instead of one-off subsidies, countries can establish revolving funds, guarantee facilities that can blend concessional finance, sub-equity, and even institutional investment to provide a more stable ecosystem for rental low-income housing. And finally, I would say the social management capacity. Every successful initiative, even if it's small, has a dedicated social management team, not as an add-on, but as a core operational pillar. So they can help families settle in, strengthen the community life, and manage the transitions that sometimes can be drastically change the turnover. And here we need to specialize these intermediaries that can be capable of managing portfolios of rental housing sustainable. It could be public, private, hybrid entities, but they require professional capacity and clear governance. There are a lot of examples in Europe that have been there for a long time, but here in LAC at least, the know-how already exists in different family funds, NGOs, housing cooperatives, but we need to professionalize it and have clear governance on how they can operate. That would be from my end.
Thank you, Marina. That's excellent. Okay, so I'm going to open it up a bit, and I see we've got some really interesting, excellent observations, comments, questions from particularly from Pedro Mora. I see from Chile, and so I wanted to jump onto one of his kind of observations and questions about the role of partnerships. And I think partnerships can take many forms. You have kind of the formal PPP approach, or kind of a slightly more informal. Kevin's already alluded to the importance of land in Kenya. That's kind of within the purview of the public or local government to allocate. So, and this is kind of to all participants. Have you seen examples of strong partnerships? And what is kind of the role of each of the partners? I know from personal experience in the UK, where I'm from, that in PPP type transactions, rental often features as a big part on the affordable side. So developers would only get granted planning permission if at least 30% of the units they're building are considered affordable. And typically those units would be bought or taken over by housing associations that then provide them with affordable rents. So intrinsically, there's kind of that link between affordable rental and the PPP structure in the UK. It's not quite as well established in more emerging economies. So to all of my panelists, whichever one of you wants to come in, tell me about the link between partnerships and affordable rental. Hello, do you want to come in? I saw you put your camera on.
Sorry, I forgot I was muted. Actually, partnership is the basic secret word for the survival of Egypt's program, because without partnership we wouldn't do it. Actually, also partnership is not with governments or partner government entities, but also partnership with the private entities. We had partnership with governmental and ministerial agents like Ministry of Communication to set up for us and help us in the technological frameworks and the system and building the system, technical system. We had partnership with Ministry of Finance to give us the and subsidize the interest rate for the program. We had partnership with Ministry of Solidarity to get the coverage and know exactly through their research systems to know who are those who are below the wage income levels, and to get certified HR letters for these peoples. This is from the governmental point of views and ministries. We also had partnership with private banks. We have like almost 20 banks, private banks. We started at the beginning with only public banks, 4 public banks at the beginning of the program. But nowadays we have like 31 banks, out of which are almost 20 are private. So we had worked a lot with the financial sector in Egypt to prove the worthiness of working with the low income people. We also had a partnership with private investigation companies that's working with also with banks and private banks. So to document and verify all the documents that we receive from our applicants. We also have private sector participation in private companies, contractors. That's over 2,000 contractors, private contractors who are working on our projects. We have very limited public contractors to work in our projects. Nowadays, we are working with private developers. We have like around 5 or 6 private developers. We are doing a PPP program with them. We are working with them nowadays to succeed in launching around 10,000 units by a private sector. We had more than one round of discussion together. We had like 3 rounds of discussions. We have made visits to the sites to let them get acquainted with what we already have, to know what's our products, to build for them the vision of where we want to be and how our units should look like. Also, we had one of the rounds to let them sit with the big contractors we have. Like we have contractors like doing 2 or 3 buildings where one building is like 24 units. And we have big contractors who do like 500,000 units. So we have the small ones and we have the big ones. So we have managed to let them all sit together to discuss the issues, to see to learn from their experience, so they could start from where they have ended. Also, we have partnership, of course, as I mentioned before, with the World Bank, with the IFC, international on the international level, with the World Bank, with the IFC. We have also a partnership with Khazna, as I mentioned, in our rent, which is a private fintech in Egypt. We have partnership with HPRC, which is Housing Research and Development Center, which technically advise and help us through our stages when we are on the buildings. Whenever we locate and get requests from our applicants on certain area or to build and start building. Before we start building, we go to HBRC to test the lands, to know if it is fit enough and good enough environmentally, and to be viable with the projects. Also, we have worked with HBRC in getting certification for the green building certifications. We had the local pyramid, green building permits rating system, which we have certified 25,000 units as green units, and we have moved forward to another step with the age certification with IFC, and they are also helping us to qualify our units. We have already submitted our 14,350 units for age certification, green age certification, and we have finalized the audit stage last week, and we are waiting for the certification this week or maybe mid next week. So partnership is the secrets of success in expanding our sustainable social rental and ownership housing in Egypt. Nobody could work all by himself. It has to be our partners to succeed. Thank you.
Thank you, Hella, and I couldn't agree more that you're one of our best partners from the World Bank side in terms of delivering things in Egypt. Marina, Kevin, do you have observations on partnerships and kind of particularly addressing some of the points made by Pedro in the comments on how you build in the infra part in PPPs or the land part? Marina, do you want to go?
Yes, thank you, Simon. Yes, land is it's a problem because it's scarce and it's in all the cities, I believe around the world, not only in our region, it's a problem. But the low-income rental programs are also focusing not only in building new units, but also in recycling units that are already being there. In Brazil, there's a private crowdfunding called FICA that it's taking advantage of units that are already there, and they bring them into their portfolio so they can be provided as low-income rental units. And also Brazil they have this national program called Minha Vida, Minha Casa, that it's been there for years, but now they just renew it, and low-income rental housing is now part of this program. So, and Brazilian government has embraced the part of working with not only by the public sector, but also with private NGO and community to boost this specific branch of the program. Also in Mexico, the national housing policy has a small part, but it's already part of the national housing policy regarding rental housing. And they are partnering also with Infonavit to see how it can work. And Infonavit will be partnering with other private institutions. So I would say, as Dr. Hala mentioned it's their partnerships are needed. And we also need to understand that it's not only about bringing financial or money specifically, but also assets. They can bring also assets. They can bring buildings that can be renewed into low-income rental units. So I would say that, but we also have a regulatory gap. In many countries, we don't have the legal category for social rental operators. So some projects got around this by using the nonprofit legal figures or municipal corporations. I mean, we've been getting creative, but in the long term, we need the law to formally recognize the low-income rental as a housing function with public values. So I would say it's great that we are forming the partnerships, but we need regulatory frameworks to support them.
Okay, thank you, Marina. And Kevin, you already spoke about some of the partnerships. You mentioned the free enterprise zones, and I've got experience. I worked in Kenya a few years ago with Nakuru County, which is a few hours outside of Nairobi, and it's one of Kenya's big flower growing regions where they export flowers all over the world. And we were working on a housing PPP program together with some of the flower growers that need housing for their workers. So that was kind of one example that came to mind of partnerships, and that would have been a mix of, I guess, rental and ownership. But Kevin, do you have other observations in terms of partnerships and the role of land in Kenya?
Thank you, Simon, for really recognizing that aspect of Nakuru. I think it's just one. It's fairly a new concept in Kenya, not very new, but again, it has really tried to grow in the past 5 years. I know there's one approach in Kibra right now. It's the Nubian community development. So technically, it's something that is sprawling across the community landowners, because as we know, these are people who can really come together and have a joint, say, joint security of a given parcel of land, because one biggest factor is that, and then now the income aspect comes into play, the financing aspect comes into play, and uh, for the case of the Nubian community, just for example, I know a sect of developers approached them, and because if you know Kibra, Kibra very well, it's just 10 kilometers from the CBD. That is, it's quite prime. Uh, but then it now boils down to what goes to the people, because they've contributed one aspect of the development, but then the developer comes with another aspect of the financing. Then now, how is the sharing bit? I think that's where we've not done well in terms of policies that guides, if a PPP approach really happens, what controls the sharing bit, because the development was to take a pattern in the matter of the houses are done by the developer, but they're leased to they're leased to the wider citizens. Then the developer recoups their money back. Then the houses are reverted back to the landowners. But then if you look at that approach, it has gaps, because it lacks gaps on the specificity of that sharing bit. Who gets more? At the end of the day, the houses will remain to the landowners, but the question is, for how long? And then the bit of I think the government again has tried, just to take you through. The government has done a bit on uh, just 1 minute. Uh, the government has done a bit on trying uh, to formalize the informal sector. But again, in the same process, we know there's a lot of dense informal settlements around there. So then the demolitions happen, and then after that, the people that have been relocated or whose houses have been demolished have to be rehoused. So then that transition of from the demolitions to where they are going to, and then to coming back, or to joint ownership of these housing infrastructure becomes really a challenge. That nexus of a point where the this partnership really exists in a formal way. It's a challenge, I think, that the government right now is battling on a number of policies on how then these two partnerships within the informal sector, which is the biggest headache, versus now the government coming in, and then that nexus where the government exists, and then the people takes over, either as tenants or a full ownership. But just to go further, I know there's a lot of partnerships that the affordable housing as really put forward. The example of the infrastructure, it's a big bit where the government has really embarked on massive infrastructure around this, the development, we call it the development hotspots. The circles are registering with the government, where, because we know we have the circles are really big in Kenya, where they have high volumes of money, but the problem has always been the bureaucracies of involved in the land, and then the bulk infrastructures bit. Because if that is solved, then various private entities are really willing to put their money into the market, and then these, with these incentives, then all the costs becomes a little lesser to what the original cost would have been. And these examples we can see in the outskirts, the peri-urbans of Nairobi, the Kitengela, the Athi River, where we have a lot of these development pockets really emerging. And then people have sought to rather buy from these developers off plan or at a finished level. Then the developer can now recoup back their investment in that order.
Great, thank you, Kevin. So the agenda says that we open it up for. I'm not sure how this works, Marina. So you have to go, because can the participants speak, or is it through the question board?
Yes, if some of the participants want to raise their hand and participate,
Okay.
of course, Simon.
So raise your hand if you have a burning question, or I can carry on asking questions. So there's still some questions unanswered in the Q&A and just in the chat general. One theme that's come up a couple of times, I think Ashraf asked a question and Martin asked the same question about informality and how to deal with those who have work in the informal sector, who have informal incomes, and what kind of provisions can be made for them in terms of the formal rental sector. So maybe I'll go to hello, because you spoke, and I think the question came linked to your example with Hasna, where it is low income, but because it's directly a payroll deduction, it assumes that you have salaried workers, even if it's very low salaries. What are there provisions or thoughts around those who aren't salaried, who are kind of self-employed, but can't provide the salary slips?
So thank you so much for the question, Dr. Ashraf Aid. Actually, we don't serve refugees or migrants because our program is targeting Egyptian citizens. So the second half of the question does not apply for our program. The first half for the informal workers, as I mentioned, we had difficulty in the first launched program in 2016 due to the informal workers and who doesn't have a stable income level each month. So for us, this was really very this pilot we are running nowadays since last November, that's almost 1 year now, is targeting Khazna employees. And when I talk about employees from Khazna, I will tell you the total number of the participants in this program. That's like 80,000 of the participants. We had reached almost 80,000 employee in different companies. That's 211 company with an 80,000 employee. So we had a very diverse number of workers and employees, but we really didn't touch on informal workers at all. Also, we have restriction on this as rent program, but in our ownership program, we have a huge number of informal workers and informal employees. The ownership program gives the informal worker and employees the opportunity to submit an income certification from legal attorney that's signed from a legal attorney that proves his level of income. So they could apply for our ownership program, and we have like almost 24% of our participants and the customers in the ownership are informal workers, 24%. And we have like almost 51% are private sector workers. So the informal could apply easily to the ownership, but actually we didn't have the chance yet to try with the informal sector in the rent. Still, we are testing the water for the employees at the companies through Khazna.
Sure.
Because so this is for answering Dr. Ashraf.
Yeah, and it's challenging, isn't it? I have to say, from the World Bank side, in terms of the programs we've supported, I think informal rental isn't something that I've seen. In theory, I think the burden of proof in terms of it should be lower than what a bank requires. So I think naturally it should be more open. But as to formal schemes supporting it, on the ownership side, you have schemes like in Morocco where you have the guarantee fund that supports not just informal income earners, but also irregular income. So if you're working in things like agriculture or tourism, where your income may not be evenly spread out over the year, which I think was one of the questions in the chat. Also, there's a guarantee that kind of ensures that if you miss a couple of payments, there's a guarantee that picks it up, and then if you become regular again, the bank isn't kind of taking undue risk. I guess there's an opportunity there on the rental side also. So very quickly, Kevin, if you just 1 minute on your side, because I know in Kenya, 75-80% of the population that is kind of working in the informal sector, essentially. So if you're going to have a policy on housing and rental that is relevant for the majority of the population, it is something that needs to be addressed. So what are the thoughts on this from the Department of Housing in Kenya?
Yeah, thank you, Simon. And I believe that various approaches that the government is putting in place, we really just need to scale them, because the biggest issue, as I've said again and again, it's the traceability of the income sources of the persons in the informal settlements. So that's why as much of the social housing and the affordable housing is geared towards people with an income, a traceable income. We know that there's a lot of untraceability in the informal sector. So it's an economic strategy that has to trickle down into the housing, because then it's only by then that the banks are going to have that credibility into really investing into developers that wants to go into that informal areas. But again, that is the bridge that the government is trying to shorten or to bridge the gap of through the levy. We have the levy, but again, the levy stands as a mortgage security as well. So the developers through PPP approaches are incentivized through the mortgage and then through that is through the levy. So uh, if again if you're told that a policy has to be enacted, then that policy should be geared towards the longevity of a mortgage, streamlined kind of a way that it's not, it's not a shorter, a shorter period mortgage incentive, but again, it's a long term, but with low income rental, policy in mind that the fund, we can create another fund, or we can remodel the existing fund, the housing levy fund, to the point that it now creates a subset of it to particularly to the people of greater of lower income threshold. But again, now the biggest concern will be who is of low income, cadre, and that traceability point, then the government can now think of a formal way of bringing data, a way of tracing, the income earnings of the people living within the informal sectors. Thank you.
Thank you, Kevin. So I'm going to start winding it up now. So I've got a few kind of closing observations, remarks, but I wanted to give the panelists an opportunity for a couple of final words. So if I could ask each of them, and to keep it very brief, so kind of 30, 60 seconds of kind of what your key takeaways, or how do you see the rental sector moving forward in your country or region. Maybe Marina, do you want to kick us off with a closing?
Thank you so much, Simon. Particularly in Latin America and the Caribbean, we are seeing great efforts from national governments moving forward on institutionalizing low-income rental models. As I mentioned, Brazil, Mexico, Chile, of course, has a long history, although they have some kind of challenges to move on. As Pedro was mentioning, land and building from scratch is one of the challenges. And I would say, moving on from national frameworks, we also need to embrace partnerships. Subsidies by itself are not going to be enough. We need to bring on the private sector because they are interested, but they need to have this regulatory framework that can give certainty about their participation. And of course, we need to be aware of the needs of the families. And that's why we are also advocating for having this very particular follow-up on community management. And finally, I would say that we need to keep on collaborating, on imagining, thinking out of the box. It's definitely needed. And we also need to think about housing being a shared social infrastructure. It's not only the house, but it's all the effects that has in the lives of people. And it's not just about building units. So we need to build the cities that can include, protect, and empower. So let's think about rehabilitation, regeneration of buildings, and how we can make different schemes to help and support the livelihood of all the people in our regions. That would be my part.
Thank you very much, Marina. Kevin, can you have a very brief few closing words from you?
Yeah, thank you, Simon. I think moving forward, we have to scale this topic on, and we have to be very frank that we need a national affordable, rental housing fund that is providing long-term, low-end financing to PPP approaches, to CBOs, to SACCOs, to private developers, then we really need to, as a government, then we have to de-risk or provide risk guarantee facilities that encourages then the developers to come in into the play. Then the biggest animal we have in Kenya is land. I think we have to try to check on our land policies to the point that we harmonize them in a manner that we can get land in a cheaper way. But again, now the processes of planning, the documentations and the approvals is another hot topic that the government then can try to leverage on and incentivize the developers to the point that it's zero rated or there's a tax incentive in that manner, such that it can encourage developers to come into play. And then finally, we have to improve our institutional framework in a manner that the projects don't end with a particular political era. Then we have longevity of one institution, that the program should not die because a certain president is not in, then it should continue because then it provides that lengthy communication, and the institutional memory and the policies are carried forward. And then finally, the PPP approach, we have to embrace the ACZs. They are a good incentive that the government started, and we have to allow the private people to come into play. And then we also have to allow the biggest of all, the infrastructure bit, which if we can offset the infrastructure aspect, then I'm very 100% sure that then the developers will come in and they will not shy off. But again, they'll also try to reduce the cost of construction, that eventually reduces the cost of rental. Thank you.
Thank you, Kevin. Helle?
To finalize, I'd like to say that there is no one way which is perfect, or there is no one way that it's good to take. You have to try yourself. You have to go hit the doors and make your own way to implement your programs. Your program depends on your experience, depends on the culture you have in your country. So always get in touch with people. Always go to the end user, ask, listen, and try to fulfill their needs. Housing is a basic need for everyone. So you cannot do it all by yourself. You have to always listen to the end user. Of course, we did have a lot of challenges. We didn't succeed like that from the bloom. We had also a lot of risks that we have taken, but we managed step by step, and we learn by doing. So housing as a house is for a whole life. A housing program takes years to be established. So it's not in one day, it's not in 1 year, but it takes time to build. So you have to learn from your faults. Do, work, and learn. That's my last words.
That's a very good
Thank you.
message, I think, Helle. So I've just got some very quick kind of closing remarks to try and.
Simon.
So Marina, go ahead. Yeah.
Oh, just before you close, there's Pedro from the audience who would like to just take 1 minute.
Please, yeah.
And then we can move forward to you closing the session, just to have the audience participate. Go on, Pedro.
Hi, can you listen to? Are you listening? Yeah. Well, hi Marina, hi Simon. No decisions. Well, thank you for letting me talk a few words. I couldn't be more agreeing with Marina in terms of engaging with the social context of the families, the social needs, and also focusing on the real needs right now, which are in my country, in Chile. Immigration has been very intense, and they come from different countries: Haiti, Colombia, Venezuela, Peru. Always there are neighbors, but that challenge the actual housing policies and shifts the focus from the number of units to the quality of the housing and what should be delivered to the families. Not only a roof, a ceiling, windows and doors, but also the quality of living and the livelihood that has to be enhanced through urban projects, the urban context, squares and other spaces that are commonly misplaced in a social housing project, and oftenly they're left to maybe some fragments of the site and not really taken in account as part of this, a central part of the livelihood of the new families. So I'm really glad that that focus has shifted globally, and also the focus on the families are really relevant to fulfill the real needs, as Simon said, and in the previous talks. So. I am really glad that we are all in the same page and developing projects that really serve the needs, the real needs of the families. Thank you.
Thank you very much, Pedro. So I'll just go back to one of the remarks I made right at the start, that rental housing is often the forgotten child, as it were, in the housing family. It's not necessarily always given the priority it should be, and I think a lot of the panelists have reflected this. But equally that is changing. I think there's a realization that a balanced housing system that addresses the needs of all strata of income and of society needs a range of solutions, whether it's ownership, rent to own, market-based rental, or social rental. You need that full spectrum of housing solutions for a system to work. And then to what I've taken away from the panelists is to get to that position. The number one thing I think all of them agreed on, and had lots of great examples, is partnerships. It's not just a government, it's not private sector, it's working in unison with NGOs, with civil society, with households, and it's the more you have this coming together, the better the results. Particularly, I think Marina gave some great examples, and I think Kevin also of working with local governments, and by is local, and you need solutions on the ground, solutions that take account of the communities where it's being built, and like Marina said, beyond just housing as bricks and mortar, but housing as a home and part of a community. The second one, which I was very taken by, which Ella talked about, the Hasna example. I think it is a real kind of guiding light on some of the solutions of using technology in particular. I think there's an opportunity to overcome some of the challenges that were raised, particularly on informality. There's enough with AI these days that, okay, you don't have salary slips. There's other ways of verifying the credit worthiness of people. Just because you're informal doesn't mean you're not credit worthy or you don't have a regular income. And technology can be used as a way to bridge that. So I see technology as kind of an enabler for rental. And then the third one, which again is maybe not explicitly mentioned, but I think there was an undercurrent in terms of sustainability. Whether it's sustainability of subsidies. Kevin spoke a lot about the levy and how the levy is going to be used in Kenya. The levy isn't infinite. You still got to make choices on allocation, on targeting who receives it. I think there was a lot of discussion in terms of how the PPPs work, of how much is spent on infrastructure, how much land is allocated. So you have a lot of choices, and when you have a choice, you need to think about sustainability. How can you make it go as far as possible? And so for rental, like other sectors, the sustainability of rental policies is critical. So again, let me kind of reiterate my thanks to Marina and the team and Habitat for Humanity for inviting me and the panelists and organizing the event. And thank you very much to you, the participants, for joining. Thank you.
Thank you so much, Simon. Thank you so much, Hala and Kevin, for being part of this conversation. This is the second part, the second webinar of the series. We're going to be sharing a full report of both sessions with all the assistants and, of course, with you, our panelist and moderator. And we hope we can start boosting this rental ecosystem around the world. And we're going to keep exchanging and learning from each other. Thank you so much. Have a great afternoon, day and night.